Right, are you in the market to buy a home? Well, you're competing with the typical home buyer whose annual income is at a record high. The typical home buyer is raking in $107,000 per year. This is according to a report out this morning by the National Association of Realtors. Jessica Lautz, National Association of Realtors Deputy Chief Economist and VP of Research, is here to break down this report for us. Thank you for joining us this morning. So, as we're looking at especially these first-time home buyers, they made up 32% of all home buyers, up from last year's historic low, but still below average. But talk about the demographics. Who are these home buyers who are snapping up these deals?
Well, they're wealthier. We know that the typical home buyer, especially for a first-time home buyer, they're essentially making nearly $25,000 more than they were last year. So they have to be higher earners to actually enter into today's housing market. They're also tapping their assets. So they're looking at their stocks, they're looking at their 401k, even cryptocurrency to put down as a down payment.
With that said, I mean, this is a really tough market. We talked so much about the higher rates, specifically on the 30-year fixed, but also the fact that there are those who are looking for their second home who have equity already built up. So how does that stack up for the first-time home buyer when inventory is so limited?
Well, that's the thing. And that's why we're seeing still historic lows of first-time home buyers, is because inventory is incredibly limited. If there's a multiple offer situation, that repeat buyer who can put down a larger down payment than they have historically is going to win out on that bid. And in fact, we've seen actual down payments go up to a 20-year high, both for first-time and for repeat buyers. And I think that speaks to first-time home buyers saying, look, I have the money. I want to enter into the market too. Please accept my bid. But we're still seeing that repeat buyers are winning out.
And I want to talk about household composition and how much that's changed and how that's affecting who's able to afford some of these homes and where they're buying.
Right. So we're seeing that married couples are dropping, but what we see overall in the US is that there's generally a smaller share of married couples today. So we see more single women entering into the market. I think this is amazing. We see that they're competing against these repeat buyers who have higher incomes. They're saving for longer periods of time. But I have to say that housing affordability is going to impact these singles more than we would see for married couples.
Jessica, that 30% that you alluded to at the top of first-time home buyers who are snatching up these homes, how does that compare historically?
So historically, we've seen that first-time home buyers are 38% of the market. So we do still see that they're lower than what they have been historically. Yes, we do have a higher share this year than last year, but we're still near historic lows, unfortunately.
And Jessica, I want to ask you about home sellers, because we've been talking a lot of people sort of with their wealth locked in their houses because of their equity. Talk about the typical seller right now and what they're looking for.
Well, the typical seller is essentially someone who may be a retiree or thinking about retirement pretty quickly here because the median age is 60 years old. They have a lot of housing equity, so they're able to make these trades where they want to be, looking at their ideal location, perhaps in retirement. And we also know that they've been in their home for a decade. And overall, our analysis shows that that's about $200,000 in housing wealth that they could be sitting on.
You mentioned the 38% where it used to be in terms of first-time home buyers. What's it going to take to move the needle further? Does it come down to the rates coming down, or is it about inventory more?
I think it has to be both. And both of these things need to be out in the environment for us to see more first-time home buyers. And the reason why is because if we have lower rates, that's going to be wonderful for buyers who are sitting on the sidelines, but we're going to have multiple offers coming back. And perhaps those repeat buyers who are also sitting on the sidelines saying, I want to be in this lower interest rate home, I'll move into the market. And so that's going to put a lot of pressure on multiple bids coming back. And I fear for the first-time home buyers in that scenario, we need the inventory to support all buyers right now.
And Jessica, as you look at the industry itself and how much it's changing, obviously a lot of focus on commissions, a lot of people deciding not to go with a traditional real estate agent and looking for some of these online options. How does that affect affordability when people are thinking about how much they can spend on a home?
Well, I have to say that one of the things that was really impressive to see this year is that 89% of buyers and sellers used a real estate agent or broker. This is the biggest transaction of their lifetime. This is financial pressure, but it's also where they're going to live. And so they want to make sure that they're making the right decision, and they want an expert by their side as they go into that transaction. And we're seeing that agent adoption is up because people need that agent.
Jessica Lautz, National Association of Realtors, Deputy Chief Economist and VP of Research. Good to talk to you today. Appreciate the time.
Thank you.